let's go ahead and dive into the first part of this call concept, which is going to be market structure foundation. First up is going to be the market structure type. Okay. So for this section, I'd like to draw a few things. What are the different type of market structure that we're going to have? When you guys think of market structure, what do you think of? We typically think of three primary way structure can be created, right? We can either have a bullish trend where we essentially are continuously up bullish. And then what we're creating in a bullish trend, we're creating higher high and higher lows continuously, right? One after the other, higher highs and higher lows. However, once this high is created, typically what do we leave behind? We leave us, we have originally we have what, a resistance, right? That we have here, right? Because price is essentially trying to reject off this zone. And once we come here, we create what, support now, right? Now, once price bounce off this support zone and expand, this resistance here turns into support.
Connection.
This resistance right here turns into support, right? And then eventually, price retests that support and bounce off. And I use it as a cushion, right, to expand and create that new high high, and so on and so forth. And then a high low is created, and you can expect this zone right here to become what, turn resistance into support. Simple. And then for bearish trend is essentially the opposite, right? As we're moving from one swing, right, from one swing right here to another, we're typically going to be creating what, originally we're going to have what, support right here. And once price pull back here, we're going to have some form of resistance, right? That indicate that price is no longer willing to retrace. And then when price breaks this support turns into resistance. And then it allows us right here, once we finish expanding, to pull back to create the lower high right here. And then we have our lower low, and to continuously expand. So the characteristic of a bullish trend and an uptrend is continuation in the structure formation, right? With all resistance turning into support, or all support turning into resistance, essentially, right? That's what you like to see. And then you're gonna have the third type right here, which is a sideway or ranging market phase, where you're gonna have equal highs right here, essentially at this level, equal lows at this level, and essentially price is going to be stuck inside of this range, and it's not going to want to break out, because essentially all this level here is level where price is essentially trying to sell off, come back inside of the range, and then this level right here is where price is trying to buy up and stay inside of this range until we have a major breakout, right? And then we go back to either a bullish trend or a bearish trend. So think of sideways market like a pause in the market. Typically when I trade, I'm looking to avoid trading this type of market condition, right? Market where it passes sideways and does not give you clear idea of where it is wanting to go. These are the market conditions that you really want to be trading or be part of, right? When market is trending, it is expanding essentially. But when price is trending, it's essentially sideways like this. It's not willing to give you a direction yet or clear idea where price is willing to go. I hope that makes sense. Next up, we're going to discuss about qualified swing high and qualified swing low. This is a very, very important concept. So since I trade primarily on the 1 minute, the 1 minute is chaotic to a certain degree, right? Where, excuse me for my drawing here, but the one minute is very, very chaotic, guys. Right? So you need to understand, you need to have an objective way. The key word here I want you guys to remember, an objective way of identifying what is a swing high and what is a swing low. That is very, very important, because if you don't have an objective way of identifying structure on a 1 minute, you're going to be lost. Because if you come into trade in the morning and you don't understand, okay, what is a swing high, what is a swing low, and you don't have something that you can trust, right? That you can give to someone else, and they can find the same swing, they can have the same repetitive way of identifying structure the same way that you do, you're going to be lost. So with that said, the qualified swing high and qualified swing low concept is one that I created to have pure objectiveness when it comes down to identifying structure on the 1 minute. So in this example here, why is this swing right here, a qualified swing high? Very simple. I'm going to go over this right now. So the swing high anatomy, first of all, I want you guys to know, any swing high and any swing low always going to have a rejection first to start off. That is always what you're going to be looking for this to be had, a rejection. And for what's a rejection in our book? A rejection is simply a bullish candle plus bearish. Don't matter the order. All we care about is simply a bearish plus bearish. Once you have that, you have a rejection, right? So for us to identify a swing first, to start qualifying that swing, we need to see first this, a bearish candle next to a bullish candle, okay? Once we have that, the next thing that we want, so since we're trying to identify a swing high, it's always going to be first the bullish candle are going to go first, and then the bearish candle next. If you're trying to identify a swing low, bearish going to come first, and then green or bullish candle going to go next. So in this instance, we're looking at bullish plus bearish. This is our rejection here. And what we want to see here, this is what we're going to call the expansion line right here. Expansion line. And put this like this. Expansion line. And this is going to be our correction confirmation here. So when price is expanding, right? It's expanding, and then we're looking for correction, right? Before we continuously move higher. What we want to see is first a correction. So what constitutes of a correction in our book? When you identify the rejection right here, I want you guys to mark the highest point of that rejection, right? The highest point of the rejection. Once you have the highest point of the rejection, the next thing that you want to do, you want to mark the lowest point of the bearish candle, not both candle, just the bearish candle right here, as you guys can see. This is going to be a correction confirmation. So what do you want to see here in terms of a mechanic for you to have a qualified expansion, qualified swing high? You need to see price have a bearish candle that breaks below this bearish candle from the rejection first before we break past the expansion line. So you need to see this, break below this with bearish candle before we expand. Now, if price had broken above here first, then this wouldn't no longer been our qualified swing high. We would have looked for a new rejection. And from that point on, look for a new correction confirmation before expansion. Now, once we have that expansion, even before the expansion, once we have the correction confirmation, automatically this automatically becomes our last qualified swing high, right? This becomes automatically our last qualified swing high. Okay, last qualified swing high right here, as you guys can see. Why? Because we had correction confirmation here, bearish candle breaking below this bearish candle, and then closing. Ideally, you want to say close. If it wicks below, it's completely fine too. I have let the wick also be a confirmation for that correction, and then we expand. Now, when we look to create a new high, if you have a bearish candle here, now you can see how the structure is being maintained, and then we identify the last qualified swing high in this expansion here. So I hope this makes sense, guys. So for bearish candle right here, same thing, same concept. You want to identify the last bearish candle and the last bullish candle right here. You're going to place the expansion line is going to be on the bottom instead of the top here, because we're expanding to the sell side, not to the buy side here. So the expansion line is the bottom of the longest wick from the rejection candles, and then we're going to mark the top of the green candle right here. This is going to be a correction confirmation, and this is going to be an expansion confirmation here. Before we get an expansion confirmation here, or expansion line get broken, we want to see this bullish candle, which being broken by another one, like you guys see here. Once that happens, we have our correction confirmation, And now if price do expand now, we have a qualified swing low right here. I hope this makes sense. So what you're looking for either the swing high or qualified swing low, qualified swing high, is a correction confirmation after we have a rejection, right? Once you have the rejection, you look for that correction, right? Boom, and then boom. Right here, boom, and then boom. So next up, we're going to go in the chart. We're going to go over some example in the actual chart of how this is supposed to look like. So this will be very, very practical in how we identify this. So I'm going to show you guys, and I'm also going to show you guys a way to identify this that is very, very practical, and it's probably easy to practice later on once I give you guys a homework for this section. All right, guys, we're in a chart right here, and I'm going to pick a random time. As you guys can see, we're on a 1 minute right here. Pick some random time for us to work with. What I'm going to use is going to be a line like this one. That's going to describe our correction line right here, our correction line, and then I'm going to pick another one for our expansion line, okay? So it's going to be, just going to make it orange. Going to make this orange as well right here. Text expansion. All right. So now that we have that, I want you guys to now that we have that, I want you guys to understand. Now we're gonna be picking from a specific level right here. And then now we're gonna have another level right here. So all I'm gonna do here, guys, I'm gonna mark up all the qualified swing highs and lows, essentially inside of this range here. Okay. So I'm gonna move this here. So first we're looking for rejection, right? So what is a rejection? Let me move this. Perfect. Perfect. There we go. So what is a rejection? A rejection is simply a bullish plus bearish. So what is the very first bullish plus bearish connection that we have here? It's this one right here. So we have bearish plus bullish. So this is potentially what a qualified swing low that we're looking at, right? So the correction line or the expansion line, since this is a qualified swing low that we're looking for a qualified correction, right, above this current bullish candle right here. So this bullish candle plus this bearish candle, and this is the expansion line. So did we break above the correction line before breaking below our expansion line? Yes, we did. So this right here will be a qualified swing low. We're going to put QSL, qualified swing low, right here. So next up, we have the next rejection, which is right here, bullish plus bearish. So the correction line will be below this one right here, and the expansion line will be above now, since this is a qualified swing high instead that we're trying to identify, right? So now, when you look at this, right, did we ever broke below the correction line before we broke above the expansion line? Yes, we did. So I can mark this right here as a qualified swing high. So as you guys can see right here, correction was broken before we expanded. Next up, we have this swing right here, potentially, right? This swing low, potentially, right? So I mark the bottom of the rejection, bearish plus bullish right here. And then we have the correction line right here, right? Correction, do we correct and then get another bullish candle right here? Yes, we did. So we can essentially move this all the way down here and essentially have it placed there. All right. Next up, what do we see? We keep expanding, we keep expanding. We have another, actually, we have another one right here, bullish plus bearish. So essentially, we're looking for correction above this one right here and an expansion I'm sorry. We're looking for correction below here, and we're looking for expansion above this. As you guys can see, with this bullish plus bearish, we never corrected, but instead we kept expanding. So now I'll keep doing the same thing and look for the next rejection right here. Bullish plus bearish, boom, we broke. Eventually, it looked like we actually broke above here first before we ever close below. So you can essentially track for the next rejection after this got taken out here. So you have bullish plus bearish, so bullish plus bearish right here. And then below this bearish candle, we get a correction. So the next qualified swing high will be actually right here above this swing. And then we kept moving lower, right? We have another one right here, but as you guys can see there, it's isolated for the swing low, right? So the correction will be above this green candle and the expansion will be below this red candle right here, as you guys can see right here. So did we ever broke above this green candle with another green candle before we broke below the expansion line? No, we did not. So I will move this here, and then we're still shooting, dropping down. This one right here, no correction whatsoever here. I place this right here, and I place this below right here. As you guys can see, we broke again below this one. So I'll mark this one right here, and then we have bullish plus bearish plus bullish right here. And this bullish candle, yes, do have a correction right here. So I can mark this now as my qualified swing low. And as you guys can see, price continues to expand and then expand. And then we have rejection, a bunch of rejection here, but that we have. Let's mark it up one by one. We have what correction? We're looking for correction where for this next massive bullish candle right here. And then this is our expansion line above right here. So above this candle, red candle right here. So bullish plus bearish, and this bearish candle, we're looking for correction below this. So did we ever book above the expansion line first before we corrected? Yes, we did. So I'm tracking this next rejection here that broke above that line. So let's say this one right here, and let's say this bearish candle right here. So we eventually corrected below. So really, this is the next qualified swing high that we have here. This one above right here. And I'm looking for qualified swing low. Next, we have what? This rejection right here, bearish plus bullish. So the correction will be above this bullish candle. And then the expansion line will be below right here. As you guys can see, we really never got another bearish candle below the expansion line. We just kind of stayed here. This wick here took us out. So you would have moved the expansion line here and look for the next rejection, which would have been right there above this bullish candle right here, because that's the next one next to this bearish candle. So essentially this right here, this rejection. But since we essentially never expanded and essentially corrected, then that becomes an actual qualified swing low right here. Boom. And then we kept expanding, boom, until here. Essentially, I don't think I need that many example for you guys. I'm going to probably stop right there. I think 8 examples should be more than enough. 8 to 10 examples should be more than enough for this. And then after this, you guys can rewatch it over and over and do homework. So we kept expanding. Above right here, we have what? Rejection, bullish plus bearish. Correction for this should be lower and expansion should be higher. So we want to have qualified correction before expansion. So since we broke below that level, this becomes our next qualified swing high right here. And then we went all the way down here, and then we have what? This next line right here, this bullish candle will be where we look for correction. And below this red candle is our expansion line. Did we broke above that bullish candle with another bullish candle? Yes, we did. So therefore, this becomes our qualified swing low right here. Eventually, we have what again? Bullish, bearish, right? Bullish, bearish. So I can mark up essentially this one right here, and I can mark the top of this right here. So because this true candle right here, this bullish plus bearish represent our rejection after they created this qualified swing low. So do we close below this bearish candle, correct, before we expand? Yes, we did. Just right there. And then we kept moving lower. I can keep going. And then as we move lower right here, we have another rejection here. we broke past the expansion line below this, as you guys can see, before we corrected above this bullish candle. So we kept looking, we're looking for the qualified swing low, the next one. So our next expansion line will be below this rejection here. All right, bearish plus bullish. So bullish candle is right there. Expansion line is above the bullish candle. We're taking out that this candle below here with another bearish candle. So I have to move this expansion line below here and look for another rejection. Bearish plus bullish is actually right here. So did we ever take out above? Yes, we did. But when did we take it out? We took it out eventually somewhere around here. All right, so in here we just sideways until we take it at above this level. When we took it at above this level right here, as you guys can see, we have what? Now a new potential qualified swing high, because now this becomes our swing low right here, right? So now I'm looking for a qualified swing high, right? So the next rejection after we broke above here is where we broke above with this one, bullish plus bearish. As you guys can see, we're going to put this above here and correction to be below this bearish candle. So I'm going to go back. Move this right here. Why? Because we broke below this power bearish candle right here. And then expansion line we're looking for here is going to be the next rejection. Bearish, bearish plus bullish, bearish plus bullish. Right here, bearish plus bullish. We have expansion right here, correction right here, below these two. And then we broke, therefore we have a qualified swing low inside here, right there. And then we kept expanding, right? Kept expanding, qualified swing low, and qualified to qualified swing high. We have this rejection, bullish plus bearish. So our expansion actually is above, right there. And then correction is actually right there. We corrected, therefore we have qualified swing high right here. And then I'm looking for my next victim right here. Qualified swing low, boom, we corrected here. The expansion is below here, and the correction is for this right here. So it's very small, but it's visible there. As you guys can see, inside right here would have been that. Making it a little bit small so it's easy to see internally here. And then we broke above here with this bullish candle, qualified swing low. So we expanded, boom, 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 bullish. And eventually we have our correction line right here and our expansion line above this green candle. We broke, and then we have another nice qualified swing high right here, boom. Then price kept expanding to the sell side right here. So we're looking for the next bearish plus bullish is actually right there. And I can move this below this bullish candle, or you can essentially move it. We have another we broke below this bullish candle with another bearish candle. So this swing low becomes a new potential swing. I'm tracking the next rejection. Bearish plus bullish. I'm putting the correction line above this bullish candle, and then expansion below right here. Do we get a qualified swing low, a new one? Indeed we did. All the way down here, and then so on and so forth. So this is perfectly fine for this breakdown, showing you guys how to mark it up. This is kind of how you guys have to go about doing it, practicing and how to do this, because over time you need to develop the ability to continuously do this over and over, right? Once you get good at marking up these swings left and right, this is going to allow you to properly mark up buy side liquidity on a higher time frame, right? That's going to allow you to, and this is going to be for future reference, because when you go back and listen to this, by the time when you finish the entire course, oh God, I mean, a lot of things are going to just make a lot of sense by that point. This is going to allow you to also make sure you're looking at structure the right way. You're marking up order block, breaker block properly. And this is going to be the foundational principle and concept that pretty much governs everything else that you guys are going to do. So if you guys don't master this, I'm going to tell you right now, just stop this course. You need to just sit down and make sure everything that is in this course at this level at least is mastered. So I hope that I stretched that the importance of this to the highest degree possible. Next up is going to be the homework. So all I want you guys to do here, simple, is I want you guys to mark up, and I'm going to attach this homework. It is simply markup. Let me go ahead. I want you guys to mark up all the qualifier swing high and qualifier swing low. Okay. You're going to mark up all QSH plus QSL, right, in this image. I'm going to download this because this is going to be attached to this section or in the description of this section. So make sure to download that and then go to the homework and do that. I'm gonna pick another one, copy another section that you guys gonna do. It's gonna be a total of 3 in total. We're gonna pick up this one right here. Perfect. Dragging is with us. Last but not least, we're gonna mark the last section here. I found the price action I was looking for you guys. Perfect.